As promised, some results from Nvidia on the NASDAQ. Of course, these are second quarter results. Revenue for the company coming in at $46.74 billion. That is a 56% increase year over year. That was what people were looking for. The estimate had been for $46.23 billion. So a beat there for that company. The data center revenue coming in at $41 billion, so 56% increase year over year. And the estimate there had been for 41.29, so a bit of a miss there on the data center revenue for this company. Gaming revenue is up 49%, and they did beat in that. Professional visualization revenue coming in at $601 million. That is a 32% increase. And they beat on the estimate here. It was at 532, so they beat at 601. Automotive revenue coming in at $586 million. That is 69% better than it was last year. R&D expenses at $4.29 billion. That's up 39% year over year. Let's get to the key metric here. Adjusted earnings per share at $1.05 and free cash flow at essentially $0.5 billion, so a bit of a drop in free cash flow. Nvidia sees third quarter revenue coming in at $54 billion, plus or minus 2%, and the estimate had been for $53.46 billion, so they beat there. And Nvidia is going to do some buyback of shares, $60 billion worth. That approval coming from Nvidia at this time. Okay, let's run through some of this, break it down a little bit with Dan Morgan, Vice President, Senior Portfolio Manager at Synovus Trust. Dan, thanks for joining us. We will dig into sort of the bigger lift here in a minute, but the revenue number coming in at $46.74 billion and up 56% year over year, that is what many are going to be paying attention to. It's a good number.
Yeah, I mean, I think we have to construe this as a very good number. We know that when they reported first quarter 26 numbers last print, it was very messy, right, because of the China situation and the issues surrounding that, where this number is much cleaner. As you said before, $46.7 billion in revenues. That was above consensus, $1.05 versus $1.01 on EPS adjusted. Also, gross margin, 72.7%. Street was at 72.1%. And what everybody really cares about, which is that guidance for the third quarter revenue, which you said was above expectations. One thing they did come up a little bit short, like they did on the first quarter print, was in data center. You mentioned it was a little bit below expectations, but then they had a big beat in gaming, which is similar to what they had in the first quarter. So I think overall, this would have to be perceived as a relatively strong report. I'm sure there'll be some analysts or investors are going to cite the fact that data center came up a little bit short as a reason to be negative on this print. But you know, looking at guidance, third quarter revenues, and top line, bottom line, gross margin looks pretty solid. Okay,
so one thing we don't have access to yet will be the details for sales in China, and you had touched on that. Nvidia, we know, wrote off $4.5 billion earlier this year because it was stopped from selling to China as a result of a ban by Washington, and then recently got granted a license to restart sales. There's a caveat there. But Beijing now advising companies there not to buy these new Nvidia chips. So what is your impression of the hit Nvidia will take on this? I mean, is that even possible to try and figure out, considering the on-again, off-again situation with sales?
Yeah, so this second quarter, if we look at China revenues, it's going to be a wash, right? Because we know that they had the ban, then the ban was lifted near the end of the quarter, and then they negotiated that 15% payment to the U.S. government. Going into the third quarter, though, consensus right now is expecting around $5.5 to $6 billion in revenues coming out of China. So any guidance that they give on the conference call, which will be in about 45 minutes, they're obviously going to want them to give some sort of outlook to the potential for revenues coming out of China in the third quarter. Another thing to think about is they had the big write-off on the H20 chips that occurred last quarter. So those have already been taken off the balance sheet, yet they're still in the warehouse. So as you go into the third quarter, there's a potential for a margin enhancement related to selling chips that were already written off from the quarter before. So a lot of things going on in China right now. So it is kind of a moving target for Nvidia.
Okay, could the loss of sales in China be offset from what they can sell to the Middle East, which is very interested and assigned some contracts now to get some chips? Or is that too far down the line to be a consideration at this point?
Yeah, I mean, they had a good print here with very little sales to China. We know that all the big hyperscalers jumped up their CapEx on the most recent print. You have, as you mentioned, the sovereigns, which are governmental buyers now of chips. They announced on the last quarter, first quarter, that they had a Saudi company that was going to buy 32,000 Grace Blackwell 300 chips. Those are their high-end chips that are going to ramp up here in the next couple weeks. So they're able to make it up. I mean, even though China, even in this quarter, will have very little sales whatsoever, they still were able to narrowly beat the consensus estimates and give good guidance for the upcoming third quarter. So China is icing on the cake for them, but if they're not able to sell into China, like you said, they're able to make it up in other places. And, you know, Nvidia doesn't have a problem on demand, right? They have more demand than they can fill. It's just how quickly they can fill it.
Yeah, it's so interesting when you say China's the icing on the cake, because usually China's the cake, right? Is Nvidia positioned to be the biggest to benefit from all of the capital expenditures by the AI build-out? You mentioned the hyperscalers are spending something like $335 billion this year. Is Nvidia the best to be benefiting from that?
Yeah, so if we add in an Oracle, which is now in the game, they've guided their CapEx at $25 billion. So that number has moved up to about $360 billion. And you know, of the $360 billion, it's expected or projected that about 60% of that is dedicated solely just to AI. And Nvidia, as we've talked before on the show, is right now at about 80% market share in terms of AI chips and their GPU chips. I mean, you have companies like AMD, you have Marvel, you have Intel, who's going to be coming out with their Jaguar Shores chip that's also going to compete in that space, but that's down the road. So there really isn't a huge formidable competitor that's taking market share away from them. So, you know, you can do the math, right? $360 billion CapEx budgets for this year, and 60% of it's going to AI, with Nvidia capturing a large portion of that dedicated towards GPUs used in data centers.
Okay, so you know the argument that gets made that tech is overvalued, and these particular Mag 7 stocks are overvalued, and at some point that's going to come back on them. What's your counter if you take a counter argument position?
Well, you're right. I'm just kidding. I mean, if you look at the PE ratio, it's 57 times earnings, right? You look at price to book, it's 52 times earnings. The S&P trades at about 24, 25 times earnings. So you get the idea of the multiples. The SOX, the Philadelphia Semiconductor Exchange, trades about 6 times book. They're trading at 52 times book. But my argument would be, if we look at forward multiples based on fiscal year 2026 estimates, we're going to be going the second half of this on the next two prints, they're about 40 times earnings. So that's not excessive for a company, like you mentioned in the beginning, that's growing revenue at 55%, right? So from a growth to multiple based on forward earnings, the stock is not excessive. I mean, to be honest with you, I can remember when Amazon used to trade at a much, much higher multiple with much, much lower top line and bottom line growth. And they did that for a very long period of time, and no one even second guessed it.
Got it. All right, Dan Morgan, I got to leave it there. Dan is Vice President, Senior Portfolio Manager, Synovus Trust. Thanks for joining us.